Morning guys, Joel Frank here, market analyst for YouTrading, and this morning we're taking a quick look at gold prices. So you can see here, this is spot gold, and I've got it on 4-hour candlesticks. And really, since the start of July, things have been very, very subdued. You can see that here is the 1800 level, about here. That has kind of offered pretty decent support, like we've barely dipped below $1,790 per ounce, but we've been unable to rally beyond around the 1,830 mark. You can see here that the 50 DMA, which I've got marked up here in green, has been pretty strong resistance, but then the 21-day moving average, which I've got marked up here in orange, also offering some decent support. Like you can see that coming into play this week. Gold prices have been flirting with but remaining above the 21 DMA pretty much the whole week so far. And you can see actually that it looks like there's a bit of a squeeze going on here between the 50 DMA and the 21 DMA. Obviously, you can see this week the range has been very, very thin for gold, and that's not really very surprising because at the end of the week we've got crucial US jobs data, and that really could set the tone for the direction of gold next. If the jobs data is very, very strong, so we're talking an NFP number of well north of 1 million, well then that would have hawkish implications for Fed policy. It would likely strengthen the arguments of those like Fed's Waller, who was very hawkish earlier on this week. It would likely strengthen his argument that the Fed should taper its QE program aggressively. And gold won't like that, because that will probably push yields higher, and that will probably push the dollar higher, and that would likely see gold slip below this recent support around 117.90, and then probably push on towards those lows that we saw, when was that? Yeah, back at the end of June, around the 117.50 mark. Conversely, if the jobs data disappoints, say, it's probably not going to be a negative number, but say it's only 200,000 jobs added in the month of July or 300,000 jobs added, well, we could see the opposite occur. We could see, it would strengthen the more dovish arguments that being made by people like Brainard on the Fed, that the bank should take a more cautious approach towards its tapering. And that would probably see the dollar fall, that would probably see yields remain subdued, which would be good for gold. It would probably see gold move above this 50-day moving average, and perhaps even beyond this area here of resistance in the 1830s. And then we've got a bit of a volume gap. This drop all the way back here, that was the hawkish FOMC back in June. You can see prices haven't been able to recoup to that, that previous pre-June FOMC levels, which was like the 1850s. So we'd likely see a bit of a push on towards that. And then if we did manage to even clear that, well then there's not much stopping us going on to the 1860s and then even to the 1900 mark. But yeah, should be an interesting week for gold. Today's data is actually going to be quite important as well. We've got ADP, which helps set expectations for the NFP print on Friday, and we've also got ISM Services PMI, which sort of broadly helps inform expectations about just general US growth conditions. So things are set to be interesting, guys. That's it from me for this video, and I'll see you all in the next one.